So if you're a real estate investor, you should not be investing only close to home. You need to invest where the best opportunities are. So if you live in California, for example, it is a very tenant-friendly state, meaning that if you get a bad tenant, even if they're not paying you, even if they're trashing your home, if they know how to work the system, and every tenant in California knows how to work the system, they can stay in your home for a year, not make a single payment to you, and you can't get rid of them. And so I don't know about you, I would never build a business in a place where the laws are against me, where they put all these barriers to make it really difficult to be successful. And if your tenants have more control than you do, you're doomed right from the start. You're one bad tenant away from being bankrupt.
Hey, what's going on, cash flow hackers? It's Chris Kirkpatrick with Life 180, and I am here with Mike Wolf, the head cash flow hacker on the real estate side of the world. And so, Mike, what's happening, man? How are you doing?
Hey, I'm great. Good to see you, buddy.
Good to see you. I am really excited about this call with you, this conversation, because we have a lot of stuff going on in the world right now. And I think there's a lot of uncertainty. There's a lot of people looking around at the Ukraine-Russia deal. They're looking at the political issues in the US. They're looking at our inflation when it comes to our energy costs, our gas costs, our supply chain issues, the lack of supply in the housing markets. And you know, if you go online right now and you look up, like, is 2022 going to be a good year to buy a house? Like, there's so many different opinions out there. And you know, I've been doing some content on this on my own, and so I thought it would be just a phenomenal opportunity to get you on here and for you and I to have a conversation about what does it look like? Like, what's the state of the union in the investment world for real estate right now? Like, what does it all look like? Is 22 a good year to potentially invest? Should people be scared? Should they be looking opportunistically? What should they avoid? What should they step towards? And so I know this is going to be kind of one of those conversations that bounces all over the place. But I really want to be able to give people as much value as possible in this video. So
absolutely. Yeah. Well, to I guess pre-frame everything, as you know, I've been doing this a long time. I've been doing real estate for 33 years now. And you know, there's never been a day where I woke up and go, oh, there's no investments to be done today. No, I'm going to wait till the war stops. I'm going to wait till the interest rate gets to this, or I'm going to wait till this external thing to me happens. No, there's a saying that says, don't wait to buy real estate and wait. And so for people that are trying to time the market, well, so far you haven't done a good job. At no point in history, if you haven't invested yet, at no point in history did all the planets align for you, and they never will. And so if you find something that makes sense, and there's plenty of stuff that makes sense, there's so many different strategies for real estate investing, by the way. But if you find something that makes sense, even though maybe it'll make a little bit more sense in a year from now, well, in the meantime, let's say you got a rental property, and if you pick the right market and you're getting a good return on your investment, and you say, oh, well, maybe if I wait a year, I'll get it a little bit cheaper. Well, in a year from now, you've lost 12 rent payments. So yeah, so you saved a few thousand on the house, and you lost out on 12 rent payments. And of course, if you were wrong and the market actually went up, like who would have seen that coming during COVID, that the markets took off like crazy. Well, now you're like locked out of the market forever in a lot of cases. And so get in using the right strategy, using the right markets. And it's always a good time to do that, because there's always markets that make sense, and there are always things that don't make sense. So, but when I hear people say, nope, don't buy, I mean, it's a horrible time to buy, and they make a blanket statement like that. Well, most of those people, there's a reason why they are journalists and not retired real estate investors.
A lot of clickbait out there, right? As far as getting people to read articles and stuff, they're measured by that stuff. So okay, so that's a great pivot point here. So let's talk about where, well, I guess before we got on this call, we were talking, and you were mentioning there's a lot of places that are going to be really good and a lot of places that are going to be really bad, right? And so you know, there's going to be some places that continue to grow. I know you love the phrase, you got to invest in the path of progress, right? And so that's a big thing. And so you know, when we look at the current state of the country and different markets, can you talk about maybe some things to look for or to avoid, you know, if you're going to be looking to invest in a market?
Yeah, absolutely. And so let me just define what the path of progress is. That's really investing in places where people are going to be moving to, before they figure out they're moving there. And so if we look at, for example, what's going on in California, the taxes are extremely high. The cost of living is ridiculous. And a lot of people are leaving. And where are they going to? They're going to places like where you're at, Phoenix. And they drove up that market. They went to they're going to Texas. They're going to Idaho of all places. Like I would have never seen that one coming. I'm a Canadian, and I only head towards the equator. Somebody leaving California to head to snow, I don't get that. But anyway, that's what they're doing. And so imagine that, prior to COVID, you lived in Manhattan. You had your studio apartment that you're paying $4,000 or $5,000 a month to live in, but you had a good job. You had money coming in. You could afford it. And now you fast forward, COVID took away your job or took away your business. That $4,000 a month suddenly is not so easily doable. So what are people doing? They're moving to places that are more affordable. Californians are going where it's tax advantaged. People in New York are going to where the cost of living is lower. So that's a general trend that we're seeing even before COVID. If there's no COVID, well, we have all these baby boomers retiring. Where are they heading? They're heading south. And so you want to go where people are going to. You want to get there early enough. You don't want to be, by the time it makes the headlines in the newspaper, you're too late in most cases. Like if you want to go invest in Idaho now, well, you missed that boat. Not that anyway, I couldn't have predicted that one myself. But
yeah, no, I hear you.
I will say that there, where people are going right now is they're heading where there's jobs being created, where the cost of living is lower, and where at least the taxes are reasonable. And so we're seeing a lot of people in the East. One of my favorite markets, as you know, is Atlanta, because the Georgia government's extremely business friendly, meaning that they encourage businesses to set up offices there in exchange for very low taxes, because they know these companies are going to employ tons and tons of people. They can tax the workers and get the money they need to do whatever they do with our tax dollars. Well, that's a whole other episode. But so what we're seeing is markets like Atlanta are just booming right now, but they're still underpriced. We are still picking up properties sometimes for $80,000 and $90,000. And that to me is like saying, oh, well, a gallon of gas in this place is 50 cents a gallon. It's like, those days, I feel like a kid in a candy store, because there should be no such thing as a home price. You can't even rebuild it for that cost. The materials cost more than that. And so when I look at markets, and that's just one, but when I look at a market like that, inevitably, there's only one way for it to go, and that's up, because so many people are moving there. And so they're both raising the prices of the homes, but also the rental prices. And but because the government's very pro-business, what we're seeing is, Microsoft announced not too long ago they're bringing in 9,000 jobs to Atlanta. Airbnb is, I believe, building their head office there. Who else? Apple's building a hub there. In addition to, obviously, the companies have been there forever, like Coca-Cola, Delta Airlines, Home Depot, Turner Broadcasting. And the really big thing that you have to look for, by the way, when you're looking at places where there's lots of jobs being created, you want diversity in those jobs. Because if you look at places that are very oil centric, for example, well, when oil goes up, home prices go up, and when oil goes down, people start moving to other places. So if you look at the automotive industry, you look at Detroit. Well, if Ford starts laying off, well, so does Chrysler and GM. Yeah. If Delta has to kind of cut back because not as many people are traveling, well, people will go work at some of the people are definitely fixing up their homes. You go work at Home Depot. If you're in tech, there's all these tech companies there. And so you want diversity in the industries. And if you can get into markets like that, and that's just one, that's where I like to do my long-term rental properties. If you're looking to do short-term rentals, which are extremely lucrative right now, I love Orlando, where I happen to be today, as a matter of fact, looking at some opportunities. And it's crazy. I was just actually at Epcot the other day, and it's like, I can't believe there was ever a pandemic, because everything is packed. It's open. There's no masks. People are jammed into lineups, but it's business as usual. And as you know, I travel a ton, and a lot of places now, the tourism's starting to come back, but in Orlando, it's like full speed ahead. And so, see, once again, you want to get in the right market for the right strategy that you're doing. And there's definitely a lot of opportunity right now.
That's amazing. Yeah, man. So that's, when you look at that, then I guess, are there certain things that you would want to avoid then? Like when you look at markets that, because it's, well, I guess I'll put it this way. A lot of people maybe are hesitant, right? Because a lot of people live in California. A lot of people live in New York and Chicago and like all these places that are not good places to own rental properties, right? Like, could they make them work? We've talked a lot about like places like Cleveland in the past, like, can you make them work? Maybe, is it the best thing? Is it the most optimized thing? Are there some pitfalls you need to look out for, especially in markets like we're coming into? Can you talk about that a little bit for me?
Absolutely. So if you're a real estate investor, you should not be investing only close to home. You need to invest where the best opportunities are. So if you live in California, for example,
Yeah.
it is a very tenant-friendly state, meaning that if you get a bad tenant, even if they're not paying you, even if they're trashing your home, if they know how to work the system, and every tenant in California knows how to work the system, they can stay in your home for a year, not make a single payment to you, and you can't get rid of them. And so I don't know about you, I would never build a business in a place where the laws are against me, where they put all these barriers to make it really difficult to be successful. And if your tenants have more control than you do, you're doomed right from the start.
Sure.
You're one bad tenant away from being bankrupt.
Yep.
So no, don't invest close to home. But what that requires is obviously you have to have teams, you have to have the right systems in place. That's some of the stuff that I help people do, by the way. But it's so important to, not get caught up. That was actually when I first started. That's something everybody told me. Oh, invest close to home. Invest close to home. No, do not invest close to home. Invest where it makes the most sense. It's just like imagine that you lived, or imagine you're visiting Antarctica right now, and you're on a cruise, and the only other person on the cruise was somebody that was promoting McDonald's franchises and says, "Yeah, I'm here because maybe you want to buy one of our franchises, open up here in Antarctica." And say, "Oh, but we have a similar." For the same price, you can have one in Times Square in New York. Which one are you going to pick? Even if you lived in Antarctica, I would hope you would pick the one that's thousands of miles away, because the goal of any business, whether it be a real estate business or otherwise, is to make profits. And if you're going somewhere where the odds are stacked against you, you're going to have to work way harder. You're going to have to really hope that you don't get any setbacks. And so just once again, I don't live in Orlando, but I buy short-term rentals here. I don't live in Atlanta. I buy long-term rentals there. And when those markets, if and when they don't make sense anymore, I'll go to a different market. And that's what really separates me from most of the other investors, is that I don't try to make something work just because it's convenient, or even where I like to vacation. I like Orlando, but I greatly prefer, I'd much rather be in Costa Rica, but I don't own any real estate in Costa Rica. I'd much rather be in Hawaii. I own zero real estate in Hawaii. So make your money where it makes sense. Go enjoy your money wherever you like, but make your money work as hard for you as possible so you can have the freedom sooner, and you can start enjoying your life.
Yep. I love it, man. All right. So I'm going to pivot on you now and talk about, so I read this article the other day. It was a Yahoo Finance article, and I actually did a video on it because it was fascinating. But it was all about Zillow and their opinion that housing inflation was going to be 21.5% this year. And, we're coming off the highest year that we've ever had. We're coming off like 2 years in a row that were really high and then the highest. And now we're talking about a third year potentially. And they upped their projections for 2022 from, I think, 7% initially to 11%, now 21.5%. And it keeps going higher and higher and higher. Can you speak to why do you think that is, and like what are the market forces that are driving housing prices to kind of go up like this, and how do you see that playing out a little bit?
Yeah, well, number one, I whenever I see somebody make a blanket statement, it drives me crazy, because real estate isn't just like, it's not like one market where every single market's going up or every single market's going down. The United States has a lot of micro economies within it, and there's going to be places, like I mentioned, I see places like New York and California, they're probably going to start to correct downwards. And then we're going to see other markets that are underpriced correcting upwards as more people are they're going to where the jobs are, they're going to where the cost of living is reasonable. And wherever people go to, it's simple supply and demand. And so as people go to the places that are underpriced right now and drive them up, like look at Phoenix. You guys have had so many people going there from California, they're selling their homes. They're getting $2 million for like a tear down.
It's
And then they're
ridiculous.
coming to Phoenix. They feel like kids in a candy store. They don't mind paying 800,000 for that house that was worth 400,000 a year ago.
Totally.
So, um, so it's all simple supply and demand, really. And so we are going to see definitely some market increases. I think we're also going to see some market decreases, but there's so many different factors that come into play. And a lot of them we don't have control over, and a lot of them are unpredictable, such as, what if there was another wave of the pandemic? Then, less and less people are going to put their home on the market again. If they have a whole bunch of people are now, maybe they lost their jobs and their businesses, now they're going into foreclosure. That's another thing. The last 2 years, there were no foreclosures because there's a moratorium on that. So that's going to have a big, profound effect. If we see a lot of foreclosures coming into the market, that is, obviously going to increase the supply. And obviously the foreclosures tend to sell for less than what you're going to pay when you're competing on the MLS. So there's so many different factors. And I personally believe that, one, it's regional. Two, it's not that easy to just come out and make a prediction and just say, hey, it's going to go up 21%. You can say that. And then afterwards say, well, we would have been right, but then this thing happened.
Yeah, totally.
It's really, it comes down to people guessing. But the one thing that's constant that never changes is supply and demand. And so if a whole bunch of homes come on the market, then obviously we're going to see less competition for those homes. I think in general, though, once again, it's really going to depend on the market and what's going on. Are people moving there? Are they moving away? Are there jobs being created? And what are the industries in that market that are going to bring people there? And once again, it's that path of progress thing, go to where the people are going and you're going to see upward. If you go to the place where people are leaving and invest, I don't care if Zillow says it's going up 21%, I would not buy properties there, anticipating that that's going to pan out for you. And so once again, be careful of blanket statements, be careful of people that have crystal balls, and just stick with the stuff that's worked consistently year after year after year. And that's supply and demand. And really what's driven the market the last little bit has just been the shortage of supply. A lot of people did not want people walking through their home, especially at the beginning of COVID when things were so uncertain. We didn't know what direction this was going.
Well, it's crazy. So let's speak to that a little bit, because I actually read a different article that was speaking to Arizona specifically. So I don't know about the rest of the world, but the amount of homes available on the MLS right now are at 43% where they were last year. So there's actually inventory last year was really low, and that's what helped drive the market. And now it's actually at 40% the levels that it was last year, right? Like, that's pretty crazy when you think about it. I guess my question is, what is driving that? Because it seems like to me the pandemic is over. I mean, it's there, people are used to it. COVID isn't gone. It's a real thing, but people are kind of just, it's a way of life now, I feel like, and people are more accustomed and used to it. I guess, what is causing the lack of supply? Is it the fact that the new building startups are low? Is it, supply chain issues on that side of the world? Like, what is it? The lack of foreclosures? I mean, probably a combination of all the above, but something else I'm not talking about.
Well, it's a combination of all the above, and it's kind of interesting that you bring it up, because I'm actually here in Orlando, and a buddy of mine, we're going to be building condo hotels, meaning they're hotels where you sell off the individual units, not a timeshare. Imagine an apartment building, but if you're not living in the apartment and you want it, they use it as a hotel room. Anyway, I don't need to get into all the details, but my partner and I were talking yesterday, and it's not the right time to start building because the cost of the supplies, it's ridiculous right now.
Sure.
And that's because of supply chains. We anticipate that obviously if COVID does in fact disappear or stabilize, that's going to get that's going to get better, and the cost of supplies is going to go down. If you're building one home, that's one thing. If you're building several towers of hundreds of hotels or apartment units, you need to be very, very careful of that. And also the cost of labor. So there's a lot of different things at play right now. But all the things you mentioned definitely all add up. But there's so many other factors. Like, we have to look at what's going to happen with inflation. We know that is a thing that's rearing its head already, and it's going to get worse. So there's just so many different factors, but also you have to remember everything is cyclical. If everybody today goes out and buys properties, then 2 years from now, that means they're not going to be buying properties. So after every major boom, we see a bust. And so quite often when people are fighting over properties, that's when you want to be selling them ideally. It's still okay if you're buying stuff, for example. I mean, there are definitely some motivated sellers out there. We're seeing more and more of them. If you're able to get something at a discount, flip it, awesome. If you're able to get properties that make sense from a rental perspective, they're going to make even more sense. Like, let's say you bought a property right now and you're paying a premium for the property because obviously it's gone up a lot in the last 2 years. And maybe the rent hasn't caught up yet because there's been a tenant in there and they didn't want to raise the rent during COVID because that would be really insensitive. But now the actual market value of the rent is considerably higher, but it's not producing that yet. So what I'm getting at is people that are buying properties now, but they can look into the future and say, hey, well, that rent's not going to stay where it's at. But if I wait to buy that same property 2 years from now, it might cost more. That's where you make your money, is buying stuff at today's dollar, but getting your returns on tomorrow's dollar. And so inflation is really tied to what happens with rent. So there's just so many different dynamics and factors. And had I not been in this industry for as long as I have and been through as many, I've never been through a pandemic. This is my first pandemic, but I've definitely been through a lot of recessions and all kinds of world events and high inflation at other times. After a while, it's like you've read the book and you already know the ending. So, but just keep in mind that real estate is very cyclical. So after a boom, well, eventually people can't afford. If house prices go up 50% and people's wages aren't going up 50%, then that's not sustainable. At some point, people have to say, hey, well, we can't afford to live in Phoenix anymore. So now we're going to go to fill in the blank. And if you can figure out what that blank is before they get there, they'll make a lot of money. So, but that's really, there's just so many factors and it's in some ways it's unpredictable. In other ways, it's like, it's very predictable. So, but right now we have that wild card. Hey, is there going to be another wave of COVID? That's, everything, most of the other stuff, if we can get rid of take COVID out of the equation, we are going to see massive inflation. We're going to see interest rates going up, which actually a lot of investors get worried about, but it's actually a good thing for us.
Yeah.
Like, for example, if you own rental properties, your tenants are much less likely to leave and buy a home if interest rates go up, and their ability to afford what they want goes down. And so there's just so many different things at play here, but it's definitely interesting times ahead.
Yeah, I mean, I think we're in that position right now where we don't know if we're in an inflationary environment or like a stagflationary environment, right? Like the late 70s where inflation goes high, but wages, incomes, and stuff don't keep up with inflation. If that happens, things get way too expensive. Groceries, energy, gas, housing prices, everything becomes really, really stressful. Everything becomes a higher stress point on the income that you have, right? If everything you do, if you have to spend an extra $300 a month on gas and an extra $500 a month on groceries and an extra, like it all adds up. And if the housing prices are going up and incomes aren't keeping up with it, that's where it really becomes a problem. I mean, inflation in a vacuum isn't necessarily,
well, think about inflation is everything is tied together. So the cost of living goes up, but so do your wages so
hopefully your wages go up.
Hopefully your wages are, exactly. Yeah. It's not a guarantee, but hopefully your wages are. But that's also why you've got to get into, that's why I'm so glad I got into real estate, because when I look at what I paid for a lot of my properties I bought quite a while, I'm still buying, but the stuff that I bought a while back and the rent was relatively low compared to today. And now look at how much rent and how much revenue that's producing compared to what I paid for it. So that's saying, that I mentioned earlier, don't wait to buy real estate and wait. It won't let you down as long as what you buy is sustainable. So if you buy something and your only strategy is to flip it, and then the market changes on you and drops and you didn't have a plan B, then you're in trouble. But if you're buying rental properties, even if you overpay for the rental property, let's say it goes down over the next year, big deal. You're not going to sell it. You're basically, whenever you buy a rental property, you're really just buying a business in a box. And if it's done properly and you have other people managing it for you, so it's not taking up your time, it should give you passive income and make you money while you're sleeping, while you're traveling. And, if it goes down, be buying more. But you want to be, like I said, the person who's selling when we're in a market like right now where there's a shortage and people are fighting over it and paying, way more than they would have a year ago. that's when you want to have the properties to sell. But so many people, they get caught up in the hype and the media, and they buy when it's high and they end up selling when it's low, or losing their home when it's low. And it's like,
Yeah.
I see it over and over and over again. So,
well, we were talking about inflation, and one of the things about, in, I guess, real estate that I love is that it's just a hedge against inflation, right? And the ability to insulate yourself from any inflationary risk with real estate, because it's a hard asset. It's always going to follow inflationary kind of numbers. It's probably going to beat inflation as far as the growth goes, or at least be right with it. And then when it kind of goes down the other direction, even if you lose a little bit, as long as the cash flow is there, like you said, as long as you can manage the property and it's a positively cash flowing place, it works, right? And one of the things that we talked about, I guess, before we got on this call, and I actually did another video on this, talking about the fact that when we have inflation at 7.5%, which is what we have right now, and I think when the numbers come out in a couple of days, it's going to be even higher. I think it's going to keep getting worse and worse for a period of time, especially with the energy costs and gas prices going through the roof right now and whatnot. But when you look at that, traditionally speaking, when interest rates go up, housing prices come down. But that's because, traditionally speaking, inflation is supposed to be, the Federal Reserve has a goal of keeping inflation around the 2% mark, right? So when inflation gets out of control, and real rates are low, like in your mortgage rate, let's say it's 4%, you have the ability to borrow at 4% with inflation rates at 7.5%. That means the rate in real terms is like negative 3.5%, right? Like, because you're paying 4% to access and buy a property that will appreciate. I mean, if Zillow says 22%, but let's just say it keeps up with inflation and it's 8%, right? Like, that means that's a 4% arbitrage, right? That's 4% spread. You're paying a negative 4% interest rate to be able to acquire this asset. And so what I'm getting at here is, like, traditionally speaking, when interest rates go up, the housing market comes down, right? Because typically speaking, interest rates are above inflation. So that just kind of goes hand in hand, right? Like, as those rates go, they push the prices down. But when rates are low and inflation is high, until the rates get above, if inflation hits 8%, until borrowing rates hit 8.5% and exceed the inflation rate, I don't think we're going to see across the board. Like you said, you may see markets where, in bubbles that they struggle because of a lot of other economic, environmental issues and problems, and people like California with people leaving. But the bottom line, from a math perspective, it just makes sense. Like, that it's not as much stress like it would be on the markets to have interest rates going up, as it would be in like a traditional environment.
True. And I agree with you 100%. And then, on top of that, when they raise interest rates, it's meant to cool the market. That's its main purpose. Because obviously, if it's more expensive to borrow money, you're less likely to do it. The cost of you're not going to get nearly the same home you would have. And so traditionally, it does create a drop in prices in some instances. However, once again, it's, if we go back just to the simple supply and demand, even though you put those higher interest rates in place and it's supposed to curve the market, well, guess what? When people are in expensive markets, even more so now, they want to move to affordable markets so that they can, get a home that's suitable and big enough for their family and a place that they want to live in. They say, okay, we can no longer, these interest rates, we can't afford to live in New York anymore. We can't afford to live in California anymore, unless we want to have a really low standard of living. So where do they go to? And when they go to those places, even though the interest rates are higher, they still feel like kids in a candy store, because things are still relatively cheap compared to where they came from, and everything's all relative. So even though it in theory has a cooling effect in general, we'll see pockets where it has the opposite, because just so many people are moving there, and of course rent is tied to inflation.
Yeah,
and that's why we always see these cycles, because people realize, hey, why are we paying this much rent but we can own a home? And so they're always comparing what's the cost of owning compared to the cost of renting. And these things bounce back and forth all the time. Sometimes it's better to be an owner, sometimes it's better to be a renter. And a lot of it comes down to affordability, and that comes down to interest rates. So it's all tied together.
Awesome, man. Well, is there anything else that we haven't talked about, for 2022 that, I think we covered quite a bit in a short period of time here. Anything else we haven't talked about that people should know about?
Well, I think in all honesty, for me, when we're heading into times like this with uncertainty, I'm extremely glad that I've been investing in real estate. It's very stable. I'm not watching the crypto stuff doing the roller coaster. I'm not watching the stock market do the roller coaster ride. It's just, uh, when you own the real estate, you get that cash flow. It's very consistent. Whether the market goes up or down, I'm not gonna sell the properties if it goes down. I'm just gonna keep buying more and
Yeah.
getting more cash flow. And then when it makes sense, when people are fighting over properties, that's when you sell it. And just don't listen to the stuff you see in the media. Don't get caught up in the hype. Matter of fact, if you do the opposite of what they tell, if you're a contrarian, you'll probably do a lot better than if you get caught up with all the stuff that they're telling you. So don't get caught up in the greed. Just do stuff that's slow and steady. Or owning rental properties, whether they be for short-term rental, long-term rental. If you pick your market right, it's never let me down in all these years. And trust me, I didn't always know what I was doing, but I still, in the long term, always came out ahead.
Yep.
And that's because real estate, as long as you don't, a lot of people speculate on it. If you're using real estate as a way to gamble, you're probably better off in crypto, or just as it's the same thing.
Sure.
Or if you actually have a plan and you know what you're doing, and you can sustain your investment to weather a storm, and on the other side, there's always going to be increases. The real estate's tied to inflation once again, and the cost of building a home is certainly not going down, and so that brings up the pre-owned inventory. And so the big thing is don't be scared to invest. If you see things that say if 2022 is going to be a horrible year to invest, I guarantee 2022 I'm going to make a lot of money in real estate, and so can anybody else who's watching this.
Love it. Well, so Mike, I want to talk about what we're doing in April really quickly, the event. I'm not going to give a lot of details right now, but I just want to let everybody know, if you want to learn more about the real estate markets, different ways to make money in real estate, whether it's the long-term buy and hold or more of the short-term active income strategies, we are going to be running an event April 8th through 10 in Orlando. So if you're interested in that, just email me, Chris, CHRIS @life180.com. Hit me up and I can get you any information that you want about that event. And we will go from there. Hopefully see you there. So, man, thank you for being here, Mike. It was a lot of fun. I love having these conversations with you. So,
Thanks for having me.
If you haven't already, make sure you hit that subscribe button, hit the bell. That way you get notified every single time we launch a new video. And until next video, have a blessed, inspirational day. We'll see you guys soon.
See you soon.